Good afternoon, everybody, and thank you for being online and joining us here for our channel partner and affiliate discussion. For those of you who don't know me, I'm Lee Rush and I head up communities for Wealth Migrate. And it gives me great pleasure to welcome you here to learn about our new UK deal and the opportunity that's there. You'll have a chance to ask questions directly from our property partners, IPS and Crestwood Properties, and learn more in-depth details about the deal. So without further ado, I'm going to hand you over to Scott and he can take you through everything.
Hello to all of you. Well, I know we've got a short time scale. I normally like to talk for hours and Lee's given us 30 minutes, so I'm going to have to go fast. I have put this PowerPoint together and we can share it with you so that you can use this as a resource. Reminding everyone that the idea behind this webinar is to provide you with the knowledge so that you can ultimately help others should they want to participate. So let's rock and roll. Why is now a good time to invest in the UK and why is this an opportunity? Well, I want to tell you a story. Basically, back in 2001, I lived in London. I went to London in 1999. I wanted to start buying property. And at the age of early 20s, I started walking the streets. If you've read the book by Dr. Dolph de Roos about real estate riches, it's all about spending time on the streets. I walked the streets, and we just had September the 11th, and everyone was doom-mongering. Everyone was talking about how the world was going to fall apart and how, the invasion of Afghanistan and Iraq was going to put oil prices up, and oil prices were going to lead to inflation, and inflation was going to lead to interest rates. And what actually really happened was the complete opposite. I found a property in Wimbledon, which is where the tennis is. You can see here back in, we actually bought it in March 2002. It was this little property, which is a terrace property in Wimbledon. It was a 3-bedroom house. We put this conservatory on, which enabled us to turn it into a 5-bedroom house, which ultimately meant that we had multiple income streams. You might want to remember that for a little bit later. And to this day, this property has paid me and my best friend that bought this house over £1,000 per month since 2002. Why is this story important? Well, for me, when you look at the track record of the UK, and I'm going to share with you some resources now, and you're about to get a whirlwind tour of what's happening in terms of the UK. So I presume, Lee, just shout if you can't see my screen at any point. The Economist is the best place to be able to find data around the world in terms of property prices. So if you look back to 1990, when the last correction happened the second last correction in the UK happened around 93, 94, you can actually see here that the pink line is South Africa, the blue line is Australia, the green line is England, and the dark blue line is the United States. You can see around 2001, there was a little blip in the UK. You can see that little blip. Doesn't look like a lot now, but in that 6 to 12 months, everyone was panicking. Okay, and then you can even see the little blip that happened in the last crisis, which was the global financial crisis. And you can see our prices went down and then steadily recovered. There's also this website, which is even more direct, where you can go into all the different areas of London and you can view all the different areas and you can track them. Again, if you go down to you can see 2001, the little dip, you can see 2009. Just out of my interest, do you know the 2 times that I've bought property most? I don't know, Lee, if you know.
No, I don't actually.
2002.
But it's going to probably be where everyone's telling you shouldn't be buying.
2002 to 2005, 2008 while the crash was happening to about 2011. Okay, and so why is this relevant? Well, when there's challenges, then really one can look at it. And sorry, I did have the slide I want to show you there, where there's all these doom mongers at the moment about Brexit and whether it's going to impact the property market, etc., etc. I believe that there's 5 reasons to look at the UK now, and I'm going to run through the 5 of them quickly. The first is Brexit. Whenever there is uncertainty, it actually presents opportunity. And again, I've got personal track record to speak of it. I want to talk about the value of the pound. I want to talk about data. I want to talk about the fundamentals, and I want to talk about a couple of other reasons. So the first one, when it comes to Brexit, as I said to you already, Brexit has created a lot of uncertainty. It doesn't dramatically impact the fundamentals of the UK property market, but it does affect sentiment. And when sentiment's affected, it ultimately affects people's willingness to buy, and it presents a good opportunity because there's not a lot of other buyers in the market. The second thing is the pound. So we work with a guy called James Painter. I've been working with him for more than over 10 years now. In fact, he wrote chapter 2 of my book, Property Going Global. I don't know if I've got a copy of it lying around here anywhere. I don't see one lying around close. And ultimately, he's had a higher than 80% accuracy on predicting the currencies and where they go. And what I find fascinating is that over the next couple of years, there's a tremendous opportunity investing in the pound versus the US dollar in terms of where we're at. I'm going to mute you, Lauren, for now. The third thing that I believe is an opportunity, and again, any of these I can come back to and give you a lot of information. The best place to find data on the UK market is a website called Academimetrics. So you can see here I'm in Academimetrics. Every month they come out with the latest research, all the different areas, whether they're going up, whether they're going down. And what I basically wanted to show you was that it says here that the latest Bank of England report provides ample corroboration of trends Academia has been reporting on for some months, commenting on the slowdown in house prices. According to the bank, the slowest rate of inflation since 2013. The report links this to Brexit-related uncertainty, affordability constraints, policy impacts on buy-to-let, and an increase on housing supply. The bank suggests that the house price inflation and housing investment growth are expected to fall further in the near term, but that both are expected to pick up as headwinds from uncertainty dissipate and stronger income growth supports the demand for housing. Clearly, as much of this depends on early resolution of Brexit, and although there seems to be some renewed momentum in the near term. So why is this important? Well, you can read this whole report if you want to, all the different areas, what you're looking at. The one that's really important as well is that the average transactions per year in the UK is about 90,000 transactions per month, is about 90,000 transactions per month. So when it's about 90,000, then you know that things are pretty much average. Okay, what's quite interesting, and I'm just looking for it here. There it is, 64,000 transactions in April. So it's well below average, which again points to a very good time for people to purchase. So I'm not a type of investor that invests based on gut feel. I invest based on numbers, and it's this data that is really important. Let's look at some of the fundamentals of the UK. It's the 4th largest economy. It's a small island with limited space. It's an affluent and growing population. Just by the way, the slide is credit of Crestwood Property Solutions, and Lauren's just joined us, and we're going to talk a lot about to her. It's got a mature economy. It's highly educated with a world-class judicial system. It's got RICS, which is Royal Institute of Chartered Surveyors. So when you do the valuations, you've got valuable data. You've got certainty of ownership. You're not going to lose your property like in Zimbabwe. You've got acute shortage of housing and developers not meeting demand. I'm going to talk to you a little bit about that. And it's a low-risk environment. When one talks about the fundamentals, what I've always found fascinating with the UK, and one of the reasons I've invested there since 2002, is that they believe that the average need for houses is somewhere between 240,000 homes to 340,000 homes per year. And you can see that this comes from the government documents. And in 2016, 2017, they were averaging about 184,000 homes. They on or around, always on or around, or just less than 200. So every year, supply is not keeping up with demand. It is simple economics of 101 in terms of supply and demand. In terms of the fundamentals, again, a slide. Credit of Crestwood Property Solutions. House prices have grown on average 7% per annum since 1980. And equally, a slide here from Crestwood, which is if you compare it to the other types of investments, whether it's gold, the stock market, or interest on savings, you can see that the residential property has completely outperformed the other asset classes in terms of where you're at. Again, I'm flying through this. If you want to come back for questions, you can. Lastly, in terms of the UK, it's the financial capital of the world. 70% of all insurance comes out of the UK. It's got a huge amount of history, which a lot of people respect, and it's got great universities, which a lot of people in the emerging world, would like their children to be educated in the UK. 7 reasons why this property. Well, the first reason is a motivated seller. So the seller has actually immigrated to America. As you know, in America, you get taxed on your worldwide income. They're consolidating their assets and their income into America. And so they're selling off their assets around the world. Now, that's a good thing for us because we've got a motivated seller, and it's always good. It's the #1 law of property investment is buy from a motivated seller. The second one is OPM. Now, quickly, I want to see if you're engaged here. What does OPM stand for? Anyone? Anyone? I'm checking. Okay, so lots of people are coming back and saying other people's money. You are 100% correct if you've read Rich Dad, Poor Dad or Dr. Dolph DeRosa's Real Estate Riches. However, in this case, it's one step further. It's actually called other people's mortgages. So what other people's money is where you go and get other people's money to try and help you buy a house. What the one thing in the UK is that I'm a British citizen. I've been investing in the UK since 2002. I've tried to get a mortgage recently and it was virtually impossible. I could get one, but it was also very expensive and very time consuming. However, working with a British citizen on the ground helped us to get a mortgage at a local rate. So OPM in my mind is a different term nowadays. By working through our platform, you are dealing with other people's mortgages. So you're getting leverage. There's 3 income streams. So you can see the property on the right. It effectively has got 2 one-bed flats and one bachelor pad. So what I like about that is it's 3 completely separate flats with 3 completely separate rental income streams, which dramatically, reduces the risk. The target market is good. I'll show you just now from the location, but you're not dealing with the investment bankers and people that are directly affected by the economy. You're dealing with the people who are supporting the town, the region, and ultimately, first-time homeowners and very much the moms and pops of society, the middle class, who are always there, always need a house, and always need somewhere to stay. In terms of the location, I wanted to share with you quickly, if I go to Google Maps, and I will share these links with anyone who is interested. If you go to Google Maps here quickly, I've opened up Google Maps. Sorry, these were just research reports I had on the economics. So this is the property here. I'm in Google Maps, and you can actually see the property here. You can see down the street. So people, you can see it's a pretty calm and quiet street in terms of where you are. And if I go one more over, so I can just keep going around, you can get to so that's the property there. And if I go one more over, you can see there's the property there. You can pretty much walk down Upper Grosvenor Road, and you've effectively got the station literally within walking distance, basically. So there's the station there, so walking distance. So this is one of the most important things when investing in the UK and specifically London, is that you want to be close to a station. I want to start zooming out a little bit more, and you can just get a feel. So you can see actually the area of Tunbridge, Royal Tunbridge Wells. And if I keep zooming out, you can see here now where it is in relation to London. So you basically got a fast train directly into London. I've caught trains in there, sort of, Lawrence said, sort of around 40 minutes directly into London Bridge, which is right into the heart of the financial capital of London. So, it is in the commuter belt of London. It's in the southeast of London in terms of where it is. So very, very good location. And I'll let Lauren talk a bit more about that. The next thing I wanted to show you quickly was our due diligence. People want to know how we do our due diligence. This was a system that we built many years ago. It's what I wrote my book on, Property Going Global. There's a whole methodology behind it and an index. But ultimately what it does is it's what we call our 100-point system. And sorry, my computer seems to be hanging a little bit. So what we basically do is that there's 10 different variables. You've got the country, you've got the state, you've got the suburb, you've got transport, you've got education, you've got property analysis, you've got property features, you've got external building condition, you've got internal building condition, and you've got the investment analysis. What this does is it puts it all together into graphs. So it's 100 weighting average. You can see all the different stats and everything else that come through. It all pulls through into graphs and stats. And ultimately, it gives you an investment ranking. So this property's investment ranking overall, you can see the index here. And basically, overall, it's sitting at 79.2%, which is well above average and certainly something that we like to look at from an investment perspective. In terms of the exit strategy, obviously there's the option just to sell the building as is to an investor in the future. The other exit strategy is that you can take the 3 units and sell them off individually. Now, you're going to tend to get a higher price because you're going to be selling to a mom and a pop that is not going to be buying with an investment mindset, but will be buying with emotion based on wanting to buy a home. And then lastly, in terms of the financials, if I take you through to this document, where's it gone? You'll see there's a brochure that's been put together all about the properties. Everything that I've just explained is here. You can see all the breakdown. The overall financials are that you're looking at a net cash on cash return of over 4%. You're looking at an internal rate of return of 12%. The deal is aiming to be held for 5 years. The minimum investment is £10,000, although I know that in the pre-launch on the platform, they've actually made it 5,000 to allow more people to have access to it. And you can see the breakdown of the numbers, what it's being purchased for, what the mortgage is. Everything's been included in there, including a structuring fee, solicitors costs, and and even maintenance, etc. So all the numbers are part of the transaction. So how does this all fit together? Well, we look for quality partners like Crestwood, and I'm going to introduce you to Lauren now, who's a trusted partner on the ground. They bring a deal to the platform, which is being just listed on the platform. You and I and your investors globally then have access to these opportunities. And through the platform, there's 4 simple steps. You basically sign up, in a compliant way. You select the investment. Again, we're not a financial advisor. We do not give financial advice. People get to make their own choices. They transact online, and ultimately they manage their entire portfolio online. And I can share with you what that looks like. But what I wanted to do was hand over and just introduce you to Lauren, because I always say when it comes to property, people think they invest in property, but they don't. They invest in partners or people. And Lauren is on the ground. She runs Crestwood Property Solutions. And without taking her thunder, I'd like to hand over to you, Lauren, just to explain a little bit about Crestwood, because ultimately you will be the person that, well, not you specifically, but your team will be the person on the ground that will be ultimately executing on this property and delivering on the returns. So welcome, Lauren. It's wonderful to have you online. Oop, do I need to unmute you? Hang on. Lauren, can you talk?
Can you hear me?
Yeah, I got you now. Sorry, unmute. Oh, hang on, we're still getting feedback. Just wait. Okay, I've muted your other one. We should be good now.
Hi, good afternoon, everybody.
Wait, Lauren, just quickly, you're connected on 2 devices. Can you switch off the noise on one of them? I've muted you on one of them.
Is that better?
Yeah, great. Thank you.
You still hear me? Sorry.
Yes, got you clearly.
Apologies. Hi, everybody, and thanks, Scott, for welcoming me on the webinar. It's great to be here, and I'm particularly excited about this opportunity. Just to give you a bit of background about Crestwood, we've been operating in this area for a number of years. We have over 75 properties in the portfolio now that we manage for clients and have purchased and maintain the ongoing management thereof. And it's this particular property is a great property in the sense that it is really good income producer. It has produced significant returns for the current owner and has been rented consistently for a number of years. We've only really had 1 month's void, and that was due to the changeover of a tenant, but we also needed to do a little bit of work, so we were sort of requiring a bit of time to get in and actually paint and upgrade the property. The location, as Scott has mentioned, is excellent. We've been particularly pleased with the performance of the properties in the Tunbridge Wells, Kent area. Even throughout the sort of fiasco of Brexit as we're seeing at the moment. I mean, property prices have been very, very stable and in fact are still increasing year on year. So in terms of the question I get asked by a lot of our investors quite consistently is, what effect is Brexit having? And the answer that I give them generally is not a huge amount. I think the fundamentals that drive property in the UK are really what are driving property prices, and that is an acute shortage of supply and an excess of demand. So good properties in good locations are remarkably resilient and actually performing very well. Due to the constraints with the availability of supply as well, rental values have consistently gone up as well. So we are taking rental increases year on year, and we do this sort of consistently across the portfolio. So most of our clients are, let's say pretty much all of our clients, are very happy with the performance to date, even considering the fiascos of Brexit. And I guess when you're sitting outside the UK, you probably get more bad news than good. But certainly the market is resilient and property prices are resilient. So, and this particular property is, is unique in that we've got 3 separate income streams, as Scott said. And in terms of Crestwood Property, we have a really trusted team of tradesmen that actually work for us now. So we're able to get in and service the needs of the tenants quite quickly. And I think this is important too. It's not only about owning the property, it's actually about keeping the tenants happy as well. And if you look after the tenants, we believe that the tenants look after us. So we're in a unique situation at the moment where actually a lot of our tenants are choosing to stay with Crestwood and are waiting for properties within our portfolio to come up because they like the quality of the products or the property itself. We tend to look after the properties well. They are kept at a good standard, and we're very reactive to their needs. So if something goes wrong, a pipe bursts or something like that, we are able to actually employ our tradesmen quite quickly, normally within a couple of hours and most certainly the same day. And I think that's very important. It's also important for our clients to know that their properties are well looked after and that the tenants are kept happy. Obviously, you can't please everybody, and we do get sort of grumpy tenants every now and again, but mostly, we work in the interests of our investors. So we aim to keep their cash flow consistent, and we aim to keep their costs down, which increases returns. So we're working right across the value chain to try and improve and keep the actual consistency of the investment returns stable.
Awesome. And I mean, just to reiterate what Lauren's saying, having invested now internationally since 1999 myself, I always think, a lot of people think that buying the property is the hard work. Managing the property is 80% of whether you get the results or not, and that's why Crestwood is so critical here. And another thing that I like about this property is, as she said, it's a property that's already in the Crestwood under Crestwood management, and we're buying from a motivated seller. But we actually know, Crestwood knows the numbers. They know the tenants. So you're not getting surprises, which I think is really a good opportunity. I am moving fast, Lauren, and we can come back to questions if people want to. We wrote down some of the reasons why clients would want it. For investors, it's looking to access safe, stable, and consistent investment in prime, attractive UK location. It's for those who are dissatisfied with the inability to get a mortgage or access to the deal of this type, or even people that don't have £100,000 plus to be able to invest in London in a property of their own. They can now participate directly in the London residential market. It's also a direct investment, which is multi-tenanted, which I think is very, very important. It provides consistent returns, capital uplifts, capital appreciation, and proximity to London. It's not like a REIT or a property fund where you're investing in a bundle of products, with a whole bunch of fees. It's a direct property, in that London market. And then we've assembled, access to this opportunity with a prime London location, managed by professionals, independently mortgaged at favorable local rates, which I've already mentioned. Again, these slides have been created so that you can take them yourself, so that you don't have to remember everything that we make you drink from a fire hose today. Why Tunbridge Wells? It's commutable to London. It's the commuter belt. It's where all the investment bankers live. There's excellent schools around the area. It's access to deals that are not normally got. So what that means basically is in terms of the area, you've got all the surrounding properties that are fulfilling the what would you call it, basically the needs of the area, of the town, is in terms of where we're at.
Can I just chip in there, Scott?
Yeah, no, please do.
So in terms of schools, I mean, I think what's very important here is quite simply the schools are exceptional in this area, and I think it's such a major draw card for people coming out of London and for people wanting to live in the area. For people outside the UK, they don't necessarily understand just how much schools and the proximities to schools make to the value of properties and investments. So you could put a sort of 10 to 20% premium on homes and properties in good catchment areas for good schools, simply because they are in the catchment area. And the grammar schools have consistently outperform most other sort of schools in the UK and are exceptional in terms of the quality and affordability of the education that they provide. So grammar schools essentially do not cost parents anything, but the quality of the education is significant. So it's a huge draw card, and it's a massive reason for investing in an area is the schools. We also have Tunbridge School and Sevenoaks School, which are internationally recognized as some of the top schools across the globe, and have a vast proportion of international students. So I think when we say excellent schools, they truly are outstanding schools in this particular area.
So if I was to make this easy so that I can share this with others, I'm not very good at spelling. I should have gone to a grammar school. We got grammar school, we got Tunbridge, we got Sevenoaks.
Tonbridge, T-O-N.
Told you I should have gone to a grammar school. Okay.
And so, Sevenoaks. It's one word.
Cool. That's just because then people can keep all this almost as a working document. Okay, so I'm just conscious of the time there. So awesome. Thank you for letting us know about the schools, the beautiful surroundings. Lauren actually lives in this area, and I've been out to visit her, and it's absolutely magnificent with rolling hills, really, really typical English countryside. There's a great demand for rental properties, and the void is that generally you're looking at, and Lauren's already mentioned it, this property over a 2-year period has had 1 month void in total across 3 buildings. I'm not sure, Lauren, if there's anything else you want to add about why Tunbridge, basically.
I just think, it's just a very sought after area. It's also the linking to London is into the east of London, which is basically into the broker belt. So a lot of bankers actually choose to live in this area, which also means that, the area is fairly affluent. And with that sort of affluence comes, money, good shops, good retail outlets, etc. So the centre of Tunbridge Wells is actually a very vibrant, very, very sought after night spot to go. Lovely restaurants, top Michelin starred restaurants, and it's a very desirable sort of area to live. Sevenoaks has exactly the same sort of profile of bankers and high net worth individuals. So that also definitely helps. It has a sort of spill off effect to the surrounding areas around Sevenoaks and Tunbridge Wells.
Yeah, it's a very, very beautiful area. Ironically, I talk of the story right in the beginning about me buying a house. At that same time, I was playing rugby in London and used to play against Tunbridge and Sevenoaks. So it's a blast from the past. In terms of the resources for you, for all of you, there's a webinar. So not the one today, although we can share the one today as well. But we have a professional webinar for 42 minutes where Lauren and I were discussing London. We were discussing, she was discussing Crestwood, and then we were discussing the opportunity. There's also a 1.5 minute introduction to Crestwood. There's a 5-minute video on Why the UK by myself. Then we've got the platform. So everyone's got access to the platform. As an affiliate, you should have a code, or if you don't have one, Lee, who very kindly introduced us today, can give you one so that you can actually send your clients directly to the platform. I'm doing it live for you. They basically go to the platform, they sign in. So if they haven't logged in before or registered, it's very easy for them to register. They can basically go in and they can just choose the property. So this is the property here, 267 Upper Grosvenor. They can go read all about it. You can see the minimum investment. You can see the returns, the 5-year period. You can read about all the overviews, the investment summary, who the sponsor is, the due diligence. You can see the different risks, and then you can also see the brochures and everything here. So again, all the information is available, plus a whole bunch of photos for people to get access to. And like I said, there's a whole bunch of videos that are also in that link should you want it. We are also putting together a Tunbridge one-pager, which we'll put up onto the platform. And then finally, you've got the brochure, which I've already shared with you, but it's this brochure that you could actually just email to someone or WhatsApp to them or whatever. And again, that brochure is on the platform. It's right there on the platform. So we'd be able to provide you with. Oh, that's not the one I wanted. Not my WhatsApp. With all the information. What's in it for you? Well, as an affiliate, our model is pretty simple. We don't charge high fees up front. It's all about the clients making money. Our philosophy is that if clients make money, they'll be happy. If clients are happy, they'll keep coming back, and we'll all continue to make money. So the way that the affiliate model works is 1/3 of what we make goes to the affiliate. So 1% we use for setup. So there's a structure setup, 1% for the affiliate and 1% for Wealth Migrate. For a channel partner, so just to be clear, an affiliate is someone who literally just wants to send a link to the website, and the client either invests on the website or Wealth Migrate, takes care of it. For a channel partner, it's someone that can get a link and actually wants to be more involved in the sales, might want to phone clients and help them and whatever. You can actually add whatever percentage you like. So if you want to earn 5%, you can charge 5%, and it's added to the cost of the investment. The only thing I would say is that our 3 core values are trust, transparency, and alignment, and it is transparent what that is. So if you want to make it 20%, go for it. But I doubt the clients will be too happy about that. And then finally, in terms of the allocations, this is a small deal. There's only £260,000, which is about $300,000 available. We've already closed more than half of it, just in terms of our our existing clients, because we've had a pre-launch for a couple of days. And so what we basically got is a couple of slots per group. So whether it's the My Wealth 101 team, we've agreed with Charles that there'll be a couple of slots. We've kept a couple of slots specifically for you. For the other affiliates, for our China team, for our India team, we've got a couple of slots available per group. And what we found that worked really well in India, in China, was that rather than just sending out an email and saying, do you want to invest, yes or no, what they did, they had an affiliate network of over 2 million clients. They chose 20 of their top clients. They took $10,000 and they said, you've got first come, first serve, but we've personally chosen you, to get access to this opportunity. And actually all 20 of them took it up. So it's a very good way, to get momentum in the beginning in terms of what you're actually doing. I did want to mention that, that client, it's all tracked in the database. That client remains your client for life. So whether they invest a small amount of money up front, it doesn't matter. They remain your client. Each and every time they invest on the platform in the future, you will get paid, which ultimately means annuity income. And the last thing I wanted to mention was that, sometimes people say to me, well, if I send people to the platform, they might not invest. How do I know if I'm going to get paid? I want to earn some money up front. Well, we created the Inner Circle, which is a $25 a month or $250 a year. It's our global community where people can come and learn. They can get access to different webinars and a huge amount of resources. And what we do there is we also share 50% of that. So if you were a leader and wanted to go out and you wanted to get a client on, if you signed them up, for the Inner Circle and their first investment in the London deal, it'll actually allow you some good cash flow up front, and then you'll get cash flow from the deal, and obviously every time that a client invests going into the future. And so, Lee, I know that you didn't give me a huge amount of time. I'm not used to talking in less than 20 minutes, but just in terms of the timelines, we pretty much, we're having this presentation today with you. We are going live pretty much today to our whole global community in launching. Next Wednesday, we're going to have a unique thing. So on our platform, the minimum investment is well, it's supposed to be £10,000. I see the team on launch has made it £5,000, obviously wanting to allow a few more people to participate. Next Wednesday, we're going to have Wacky Wednesday, which is where 10 people will be able to participate from £1,000. It'll be on a first come, first serve basis. So again, if it might or might not be available depending on whether the entire deal is taken down. But if there are people that can't afford 5 or 10, it will be Wacky Wednesday and people will be able to participate. And we'll give you more details on that if you're interested. And then we're closing the opportunity on the 31st of May. Like I said to you, it's a small deal, and we will be bringing more deals like this with Crestwood. The settlement, just so that you understand, so depending on where you are in the world, in England, it's called completion. In Australia, it's called settlement. In South Africa, it's called transfer. So in every country, it's different, just to confuse everyone for the same thing. But the lawyers take about plus minus 2 months to actually, take it through the deeds office and change it over. So what we want to do is close it out by the 31st of May, then, jump on top of the lawyers and try and get them to complete as quickly as possible. So we'll probably be taking ownership in mid to late July in terms of that process. And that is everything from me. And Lauren. Lauren, please jump in if I've missed anything around timelines or anything that's important.
Thanks, Scott. Yeah, no, I think that's great, and I think you pretty much covered everything. So if there's any questions, obviously I'd be happy to take those. Or, yeah, I think you know, really excited to see this close. So yeah, let's get moving.
Any questions that anyone's got? I want to just look through here. So Pierre was asking about the returns. I think one thing that's really important is that when one is looking to diversify, you need to get to build a global portfolio, to become a global citizen, you need to diversify across countries, currencies, and assets. So whether you got all your money in South Africa, whether you got all your money in America, whether you got all your money in England, it doesn't matter. You should be diversifying across countries, across currencies, and across assets. Then when you do that, you will find that different assets in different markets have different returns. So in London, a 4 to 5% net yield or cash on cash return is a very attractive return, much higher than that. And you need to sort of ask yourself if there's a problem. And in terms of the internal rate of return of around 12%, again, that is very consistent with the UK and with London. In fact, often you see it a good couple of percentage points lower. So again, one has to compare apples to apples. And what's really important is you need to decide, you know, do you want to have all your eggs in one basket in one country, in one asset class, and ultimately in one currency, or do you want to diversify? And I'm a big believer, coming back to the platform, that previously, you know, for all of us, investing and diversifying was not an option. But now what you can do, and just to give you a quick idea here, I want to just take you quickly to my portfolio. We've just launched our new platform. So I'm just logging in to show you my whole portfolio here. What I think is best is that if I owned a property in London, a property in Australia, a property in America, and a property in South Africa, it would be an absolute nightmare to manage it. But yet through the portal now, or through our platform, you can basically manage everything in one place. So you can see I'm logging in now to my global platform. You can see that my wife and I own properties across America, Europe, Africa, and Australasia. You can go in, you can see my funded investments, you can see all the deals that I've invested in. If I click on any one of these deals, I can get updates to the deal. You can see my different wallets, you can see my different securities, etc. Why this is important is it's all my information in one place. I don't have to go overseas. I don't have to set up tax, structuring, compliance. I don't have to worry about finding a property, fixing broken toilets, you know, trying to find the Crestwoods of the world. Through the platform, this is all now available to anyone that has access to the internet, which is really what gets me quite excited. No questions. It's interesting when I have no other questions. I've either spoken too fast, I've bored you to death, I've confused you, and or I've overwhelmed you. I have made all these materials available. Lee, what do you suggest we do in terms of giving access to people? Because what I think would be quite good is if we had a one-page fact sheet with all the links that I've shared, plus the PowerPoint, etc. Because really for us, we want to empower people to be able to empower other people, because we very much live by Zig Ziglar's principle. You can have anything you want in life if you help enough other people get what they want. And that's the principle upon which we do business.
Yeah, absolutely, Scott. I have sent out to everyone my email address, so they can just get in touch with me if they'd like that bundle of documentation. We'll get it out to them. They will automatically get a copy of this webinar as well. Will automatically be sent to them during the course of today. Everyone
that's registered for this webinar, we can also follow up with an email. So watch your emails from Lee, and we'll just send you the links to all the different stuff that we've said, including this PowerPoint, in terms of where we're at. Lauren, there's a question here. Will the elections influence the property market?
I guess it would be lovely to have a crystal ball. I'm not sure anybody can say exactly what's going on. I never thought we'd be in this position that we are today after sort of nearly 2 years. But as I said, I think the things that drive the property market in the UK are fundamentally supply and demand. And there's a real shortage of stock on the market at the moment. So it's actually quite difficult to secure really good properties. Prices are stable, they are consistently going up. So we've seen, although, you know, the increases are slightly less than the asking price increases are slightly less this year than last year, but certainly, you know, they in no way is it doom and gloom. In no way is the property market crashing. So I suspect it'll be same as.
Yeah, and I think for Martin, I don't know, Martin, if you saw right in the beginning, I spoke a little bit about you know, Brexit in general and my own personal experience and how I found that when I you know, back when I started buying in 2002, I know Lauren's got a very similar story in 2007, 2008, when the market was crashing and she started buying in 2007. You know, often you find that good opportunities, you know, people like Warren Buffett say that when you know, when others are excited, get nervous, and when others are nervous, get excited. And I think we're in the latter. You know, others are nervous, you know, get excited. We're investing in the fundamentals here. We're investing in the long term. This is a buy and hold. You know, when it comes to risk, I see the fact that there's three risks. The first risk is the interest rate. If you don't, you know, get a good mortgage and you don't have good interest rate cover, you know, obviously you want your income to cover your costs. It's one of the reasons why, as a loan to value, we've only gone with a 50% loan to value, so that we, you know, dramatically reduce that risk. The second risk I would see is that if one of your tenants, you know, wasn't paying, so if it was a single family that was in the property, you know, you could find yourself in trouble. But because it's got three different income streams, I believe you dramatically reduce that risk. And the third one is that what happens if we have another global financial crisis? You know, these things happen cyclically. In fact, they probably will happen. But what's interesting to me is that as long as you don't sell the asset, you never lose the money. So even in London, in 2008, 2009, the property market went down 20%, but it recovered in less than 12 months. And over the last, you know, 10 years or whatever, it's doubled again. So, you know, the question is, if you don't sell, you never lose anything. And as long as you've got an income producing asset, you just hold and ride out the wave. And so to answer your question,
Can I chip in there, Scott?
Hey?
Sorry, can I just say something? Because I think it is very important, and I think it's very, you know, the UK economy is very different depending on where you are in the UK. And I think, you know, there are parts of the UK that are very much more susceptible to you know, economy crashes, etc. And if we looked at the property market in 2008, you know, what happened was there were parts of the UK that where property prices dipped dramatically, and these were sort of in the Midlands and the north of the UK, whereas sort of around London and the commuter belt was remarkably stable. And I think that's a very, very important point, because I think if you buy in areas where the draw for people to live in those areas is significant, like schools, like commutability to London, and where the economy is relatively stable compared to other parts of the UK, you know, that reduces your risk enormously. So, you know, I personally invested in Tunbridge in 2007, as you mentioned, and people said to me, wow, you've made a huge mistake. The property market is crashing. And actually, those properties retained their value very, very well. So they didn't lose any value, whilst in other parts of the UK, properties did lose up to 30% value, you know, within a year. The commuter belt where I'd bought was very stable and very strong. So that they flatlined for a couple of years, and then actually they started growing at around about 10% per annum. So I think, you know, area is fundamentally important, and there must be really good reasons why there's, you know, it's attractive to commuters, to tenants really, and to purchasers. So I think that's, you know, very, very key factor. Not all parts of the UK are the same.
No, excellent, Lauren. And again, you know, you don't profess to be an expert in the whole of England. I don't profess to be an expert in the whole of the world. And what I mean by that is that we don't go around the world trying to find properties. We go around the world trying to find partners. And Lauren and Crestwood is the type of partner we want to look for, which is an expert in residential property in the southeast of London, finding properties, renovating them, managing them, and helping us exit the properties. You know, that turnkey solution. And again, our experience at Migrate is to bring partners like Crestwood that are on the ground that can help you execute and ultimately, you know, invest in England and hopefully build a global portfolio. So I don't see any other questions coming through. I'm not sure, any closing thoughts from your side, Lauren?
I think, I think for the number of reasons that you've mentioned, Scott, this is, we've tried to mitigate risks as far as possible. It's a great location, great area. It's a solid investment. It's tenanted 100% at the moment. All 3 tenants are good. They're reliable. They're paying regularly, and the property is in a good condition. So I think, personally, I think it's a good investment opportunity, and I think it's a sound and relatively risk-free as far as we can make it.
Awesome. Thank you very much, Lauren. From your side, Lee?
No, I think it's a great opportunity. I'm excited about the amount of people that have turned up for the webinar and listened to you. I'm excited that you almost stayed within the time limit, but we will definitely get you there. So on my side, thank you, everybody. I will be in touch with copies of all the documentation, but if there's anything, please reach out. Always happy to help.
And I thank you very much, Lee, and thank you for setting it up. I want to finish with a story for everybody, and I'll leave it on the next steps just in case you want Lee's details while I tell you the story. So the story goes, it was early 2000. I bought my first house in 2002, my next house in 2003, and my mate and I kept buying houses every year. Now, you might or might not know this, but if you live in a house in England for more than 12 months, then you don't actually get capital gains tax. And so what we used to do is live in the house, refurbish it, then tenant it out, and then move to the next one. Now, that's a great strategy to make money in England. It's not a very good strategy to find a girlfriend. So I was pretty single in my 20s, and I started IPS, which is the company that's sponsoring this deal. And my mates used to joke that it was called I'm Permanently Single. Now, why is this story relevant? Well, back in the early 2000s, I had so many people coming to me and saying, well, listen, how are you buying property in England? It was specifically London. You know, I want to be able to participate. And I went to see all the lawyers, and I went to see the accountants, and I went to see the MBAs. And I said, why could we not use technology and bring people together and help them be able to invest in deals? You know, if someone's got $5,000, $10,000, £50,000, you know, why can we not help them invest? Because quite frankly, it's impossible for them to do it financially, and most of them don't have the knowledge or access to the partners. And I was told by everyone it's impossible. Well, if one thing I'm pretty excited about today, and you know, I really want to, you know, honor all of you for being on this webinar, is to share that, you know, nearly 20 years ago we were told that it was impossible, and now we're doing it. And so I'm deeply grateful to Crestwood. I'm deeply grateful to the other partners, IPS and Gladfish, that are making this opportunity available, and ultimately allowing people anywhere in the world, be it South Africa, China, India, Dubai, you know, anywhere in the world, to participate in the London market, you know, with small amounts of money. They don't necessarily have to have a huge amount of knowledge, but getting access to very good partners. And if nothing else, it's a lesson in persistence, because for me, ultimately, what we're passionate about is helping people get freedom, whatever freedom means to them. And the wealthiest people in the world have been investing in London for many centuries, the kings, the queens. I'm creating a little video at the moment, which I look forward to sharing with you, on the history of land ownership and ultimately how the kings and queens and the barons and the lords have made all their money. And now using technology, we're helping the 99% invest like the top 1%. I hope you want to participate yourself. And most importantly, I hope you want to share it with others. I believe that we all have a responsibility now to show people how they can safely grow towards becoming global citizens. So thank you very much for your time. We really, really appreciate it. You've got Lee's details there if there's anything we can help with. I can see that 2 more questions have come up quickly while we're talking. Ian asked how many people were on the webinar. There were 37 affiliates in on the webinar, 37 unique affiliates. And Brenda said, thank you very much, Lee. So I agree, Lee, you've been a star for putting this all together. Lauren, thank you for your time. I really appreciate it. And to everyone else that's turned up on the webinar, thank you very much. I believe this is a momentous occasion. 10 years from now, people will be investing on their cell phones into countries like England, into deals like this, and they'll be doing it as simply and as safely as they catch an Uber. Cheers for today. Bye.
Bye, guys.